Now we're about to dive deep. If you want the free breakdown of this entire whiteboard of everything we're about to go through so that you can increase your net worth faster, then check the first link down below for the free whiteboard and custom profit plan. When I was first starting to invest, one of the first things that came to mind was that I would struggle to know how to get to 10,000 if I didn't know how much money I had. So I have my iPad here. I'm actually going to draw it out, but one thing to know is where attention goes, your energy flows and results show. So if you're going to be able to get to your net worth goal, the first thing you have to do is track your net worth. That's going to look something like this. So you might have the first thing that you track be your in cash that you have. And it'll probably be a spreadsheet. So you'll probably first have a date over to the left. So it'll look something like this, the day and the year. And then you'll have how much cash you're making there. You'll have then not just the amount of cash that you have, but then you're going to have your liabilities or your debts. So you're going to have debts here. And then finally over here, you're going to have your net worth. Okay? Now you can count things like cars, you could count things like your house, or you could count things like your clothes or your phones or your MacBooks or things like that. But personally, when you're just getting started, and when I was getting started, I didn't count those things. I only counted the cash that I had, whether it was investments accounts, my retirement accounts, my bank account, my spending, or just my PayPal, my Venmo, or whatever. Every single place where I have cash held, and I would compare that to my debts. And so sometimes you might have, let's say you have $10,000 cash, but then you have, I don't know, $2,300 in debt. That's going to put you at $7,700 net worth. And you just track this day after day. And every single day, just make it a note, either in the morning or when you retire off at night, to run this day by day and see, as you pay attention, you can look at it and you're going to say, oh, I spent some money here, or oh, I'm making more money from this. And you're going to increase your net worth just by tracking it every single day. So that's one of the hacks that is the first step that allowed me to save my first, or make my first, $10,000. So the next step is going to have a profit first approach. So this is step number 2. You might have heard of the basic model that we've talked about with like Robert Kiyosaki, or how most businesses operate, where you have the assets, right? You have your assets, you have your liabilities. So actually it would probably look something like this. I think we could start with income, and then you could draw a line here and a line here, and you also have your assets, and then you have your expenses and your liabilities. So it's really important to know the difference between assets and liabilities. For example, you might have a mortgage that's actually going to be classified as a liability. If you're renting it out and you have rental income, then that money, the rental income, would be classified as an asset. But a mortgage in itself is a liability. You might have, let's say, credit cards, or you might have a loan, or a car or something else. So most people, they have this setup where when they're investing, when they make money, let's say that you make money and it just goes straight out of expenses or liabilities, and it goes out and you never see the money again. And it's earned income and it comes from a job or something. So in that instance, it might look like this. You have a job, you might have something else where you're part-time, or your work that you do, but ultimately it's income that is earned. And if it's going to expenses like food and maybe like rent or something else, or maybe it's going to another thing, an expense that is common that you're using every day, maybe it's gas or what have you, it's going to go out, and that's how most people's look. But what you're going to want to focus on is getting to a point where it's not that red line that just all your money goes directly out to the liabilities, but that it is the green, that you have assets that go back and become your income. So that might be in the form of, let's call it real estate or stocks, right? So you got stocks or a business that you're building. And so you are trying to make it so that your income actually goes to buying assets rather than buying liabilities. So when you buy assets, it means they increase your income, and most of the wealthy know that they have this cycle here of assets where they make money and then they use that money from assets to buy more assets that increase their income. And that is how the wealthy do it. Now, there's a second piece that goes into this, which is sometimes you have expenses, and you're always going to have expenses for certain things, and maybe you haven't been able to build up your assets yet. Maybe you don't have real estate, or you don't have stocks, or enough of an income from stocks that are paying you well, or enough of an income from your business that you still are, most of your income is not coming from assets, it's coming from a job. Well, in that case, you're going to want to get serious about managing the liabilities and expenses. And one of the best ways to do that is the profit first formula. And how this works, when I was just starting out some of my wealth journey as a couple with my wife, and we were figuring it out. We're trying to get to a point where, gosh, where's the money going? Where's it coming in? We found this profit first formula, and it is based on business. But basically what it is you have multiple accounts, and you could treat them like jars. So let's go ahead and create a jar here. So this is a jar, and I don't know if it's possible for me to duplicate this. That would be kind of cool. Oh, there we go. I'm new to the iPad game. So that's a jar. That's a jar. Okay, and these could also be classified as accounts that you set up in your bank. And they might look at you weird. They might say, why are you setting up so many accounts? Well, here's how it works. So rather than paying yourself after you have all of your expenses, you focus on paying yourself and then optimizing your expenses. So rather than only paying yourself with the money that's left over, you basically say, all right, here's my plan for my expenses, or for what I plan to use. So let's take a look. You might have expenses there, and then you will say, okay, how much money am I spending? Look at all your expenses, look at all the liabilities of money, and you might say, oh, that's 40% of my income or something. And ideally, you want to get this as low as possible. But now you know exactly how much it is, and it shouldn't be more than that. It's only expenses. Then you might have an account for assets. So I have an account for assets, and about 20% of our income goes to assets. And our expenses is much lower. When we first started, it was like 50 or 60%. Now it's down probably to about 10%. But there was a time where it started out. So these will kind of change. It started out with much higher expenses. And as you increase your income, as you start to build your assets, your expenses go down. If you're disciplined and you're saying, I'm not going to spend more because I'm making more. And when you make more, it just means you buy more assets and it just increases your income. Then there you go. So assets is an account. Then we have a long-term account. So in this, second step of getting the balances right, we're looking at trying to optimize for the long term and optimize for freedom. So usually we would do about 10% here. And it depends how much of an income you're making or where that income is coming from. But since I was able to quit or technically get let go from a 120K a year job back in 2023 because I figured out this formula of buying assets rather than relying on a job, one of the things that allowed us to do was increase our income, but at the same time, it made us more obligated to finding out how to do taxes on our own. So there is an allocation here of 15% for taxes. So whenever I make money, about 15% goes to taxes. Luckily, in the state that I'm incorporated and work out of, it's a 0% income, but the federal government is 15% tax. And usually after write-offs, it's still 0% because of how we're able to continue to invest back in the business. But at the end of the day, you want to have that set aside in case anything comes up. And we usually put it in a savings account. So we actually, put it in a savings account or maybe in some crypto that can generate a return for us on a yearly basis. Now, not stocks. I don't really go risky, and if we're doing crypto, it would be only Bitcoin, not any other thing. So then you might say, Will, this is all great, but where am I going to have fun? I want to spend money. I want to have a good time. What if I want to go out rock climbing like I just got invited from a friend to go today? What if I want to go on a trip, a vacation, or I want to buy the shoes that I want just for style? That's totally fine. In fact, what are we at right now? 60%, 70%, 85% we're at right now. So how we do it, my wife and I have 2 accounts for this. So we could split it here, but we have 5% here, 5% here, 10% of our money goes to play. This is the guilt-free spending. So expenses, covers, food, liabilities, all that stuff. We're talking, could be, phone bill or what have you. The assets goes to, like we said, like stocks, probably business, and assets, investments like crypto or stocks or real estate, right? Then you have the long term. The long term goes to just like savings, right? Savings, or maybe like index fund. I see index funds as savings. You can look at Warren Buffett. He says to buy an index fund, and that will work good for you in 65 years. But in order to create freedom, you have to find the prime segments and invest in the best companies. And that's why I encourage people, if you're going to invest in the index, if you're semi-competent in investing, like pick some of the top players that drive the whole market, like Nvidia or Apple or Google or Tesla or Microsoft. Like you don't have to hold all of the lower performing companies as well. And that's led to above market returns for me just simply by doing that. So not even like trading, but like just picking the prime segment. And Warren Buffett tells you index funds, and you guys hear it, don't beat the market and everything else. Part of that is because it makes sense if you're not competent when it comes to investing in stocks. And another part of that is large hedge funds creating narrative around wanting you to put your money in the markets and having them manage your money for you, and you just put it away in a 401k. You don't look at it, you give them all of your life savings or whatever, and they can do whatever they please and charge management fees and what have you. And I know that's maybe an extreme case, but that's really what does happen. There is that. But at the end of the day, index funds are good for saving. And so I do index funds. A good one is like Vanguard's no fee index fund for the S&P 500. Personally, I like to invest, though. You guys know, semiconductors. I go direct to the source of what's driving the S&P. But anyway, long term, this is for the rainy day. This is for the flat tire. This is for the unexpected medical. And if you want to have a medical expense account, all power to you. HSA, something like that. Personally, we go to other countries to get our medical done, and I think health insurance is a scam. Taxes. So 15% taxes. That's, just hold it in a savings account. Play. 5% for play for my wife, 5% for me. And it used to be maybe a little bit more, but as our incomes increase, we're like, we spend, the percents kind of stay the same, and or it used to be less money, but we don't change the play. If we're making more money, we do keep the play right at 10%, and we enjoy it. And so this is guilt-free. This is the fun night. This is the airplane. This is the nice car, and it's paid for usually if you're doing all these things and heavily investing in assets and getting hopefully your assets investments higher than your expenses, then you're very having a good time here, right? So that's car. For me, it comes down to like sports. I spend money on golf. I spend money on basketball stuff and also like traveling, fun travel stuff, and really guilt-free. Like if I want to go buy a steak at a really nice restaurant, even though I like to cook them at home normally, I don't care, and I don't have any regrets when doing it. So right now we're at 60%, 70%, 75%, 85%. There's 15% remaining. The rest we do, I'm going to draw them out. The rest we do education. And so education is usually around 10%. One of the biggest things that happens if we're not making money or something's not going right, 9 times out of 10, it's because I haven't learned something. If I'm at an obstacle or a challenge, I know that there's no obstacle or challenge that is too difficult or too challenging for me to overcome, because there is no obstacle or challenge that is not that obstacle or challenge is not something that can't be overcome through the mind of God. And I believe the mind of God is in everybody and it lives within us. Therefore, there is no obstacle or challenge sufficient in defeating us. So 10% for education. So almost always. Why do I say that? Because most of the time, if I'm not making enough, I gotta earn before I learn, or I gotta learn before I earn. I gotta get books. And it's funny because some of the books that have made me the most money, the $1 million books, are the books that I got for 50 cents at the thrift store. It's kind of amazing, but most millionaires or people that have money, when they're done with books and things, you know where they take them? To Goodwill or to the thrift store, and they're available there for you. You just got to go to the business section or the finance section and see those books because they're there. And I actually use courses all the time. I take courses quite often. Especially, I use YouTube, but if something specific, I want to know it, and I want someone to help me and mentor me. So I'm doing mentors for sure. Mentors can take 20 years of knowledge and get you the results that it took them years to get in 1 week, in a few days. It's really powerful to work with mentors. So 10% to books, courses, mentors. We sometimes even classify travel as education. And events for sure. And then the last 5% is our give accounts. So our give accounts is for family, friends that are struggling. It could be for charity. It could be for tipping. We actually do that. Like when we didn't have money and we go to a restaurant, I still only would tip a very small amount. And it was because in our give account, we only had so much. And so we might have some money in play and we were all excited. We get to go out to a restaurant because we worked really hard. We saved some money and now our play accounts have some money and we're like, let's go guilt free to this restaurant. And we would go and we'd say, all right, we got a restaurant food. And then we'd look at our give accounts and there's only, $15. And we're like, honestly, for us to like tip, we can only tip about 5 cents. But guess what? Now we tip more because we make more money. So I'm a generous tipper. Now it didn't start out that way. It was percentage to where I was. But now as my percentage has grown, my tips have become bigger, but they've become the same for me in proportion to how much I earn. So I'm okay with that. And so charity, tipping, for youth for sure, and investing in people that need it, right? So that's, if you don't have that account, there's no excuse. Even if you're making $1, take 5 cents and put it to giving. It will change your mood. It will make you feel better. In the best times in the world, when I felt the best in my entire life, and I don't know about you guys, but how many of you guys were feeling down? You do a favor for something, for somebody, and you give more of yourself, and then after you feel better, and you're like, wow, I gave something up and felt better. Because some people, they got it backwards. They think in order to feel better, they have to take and they have to get something. But I've found that whenever I want to feel good, I have to give something. That's the way I look at it. So anyway, that is step number 2. And when you do this, you're going to go into the bank and you can, really set up these accounts. And they might look at you funny, but just tell them, so whenever you get $100 from a paycheck, from an asset, let's say it goes into expenses, we have an automatic bank now that splits it for us, but it only works for LLCs, and it's called Relay, and it's based on this profit first formula. But it started out manual. So you can go to some banks, they allow you to have free accounts. Before we went to Relay, we did have a business bank, but we used US Bank. But anyway, any bank you choose, $100, you're going to put, $40 to expenses, you're going to put $20 to assets, $10 to long-term, $15 to taxes, $10 to play, maybe one for you, one for her, or for her, for you, what have you, for you, for him, for you, and 10% for education and 5% for give. So that $100 now gets split, and it feels so amazing to look and see. It was $100, but now you got 20 here, you got $10 over here, you got $15 over here. You'd be amazed how much more rich you feel by looking at these different accounts and seeing, oh, I got money over here, I got money over here. It's a really beautiful feeling. So that is step number 2. Step number 3 for increasing your net worth is going to be future-proof investments. So once you get to a point where you're managing these things, you're paying down liabilities, or you don't have liabilities, and you have job income, it's good, it's going into assets, and you're creating more money, then you want to invest in assets that are future proof. So for long-term savings, for example, like savings or the long-term assets that we want to hold, we do hold crypto. Bitcoin is what we hold, in Solana. Why? Because it's averaging way more percentage per year than the S&P 500. I mean, we're past that point, right? Do we need to have a conversation about how Bitcoin's not a scam? I think we're past that point, right? I mean, even Federal Reserve Powell, he's saying Bitcoin is a gold reserve. You have all these countries adopting it. we're past that point, right? So I don't need to go into that. But just know that it has been returning better than the market for the past 10 years. So for that reason, we put some savings in crypto. The other thing that we're putting, assets in is we are compartmentalizing assets in the business. So what does that look like? Maybe we have some money that goes to ads, some money that goes to the equipment, getting the right computer, I can't tell you how different my work ethic became when I ordered this Magic Mouse from Apple, or this keyboard here, or even, the iPad. And whenever I ordered them, I used to have like regrets ordering this phone. It's like an iPhone, a terabyte of storage. And I remember being like, oh, I don't know, years ago. And what I realized was that it makes you more money when you're productive. So I make more money when I'm productive, and those tools help me make more money. So getting a nice monitor makes working more comfortable. So things that make work more comfortable and creating assets more comfortable, I buy, because I know that there's actually an ROI on those investments. And then on top of that, if when I first started, I remember when I was really young, about 16 years old, I was offered to make a song for Invisalign, Align Technology. I made a song for them, a jingle, and it turned into an actual contract with the company where I sold it. And I remember right before I made that song, and I kind of had this potential of making the song for the company. I talked with this orthodontist. They were top 1% in the world, and they had a connection with Align Technology, Invisalign. And they said, hey, Align Technology, what if this guy makes a song or makes it for Invisalign, and then I'll present it to you, and maybe it can be something we can do at this new event, big Asia Pacific conference at the Fairmont in San Francisco. I'm getting ready to make a song. My parents, I'm 16 at the time, they helped me. They said, hey, you need a good microphone. So they went and they bought a microphone, a little nicer than this one even, and I recorded the song with this microphone, and it was like Invisalign made me look so fine. Invisalign made my smile shine. Invisalign, I'm no longer confined to the most miraculous design. Invisalign, it's a marketing thing I made for them, right? A jingle. And I make the song, I send it to the orthodontist. They love it. They say this is crazy. So they send it over to the PR of Invisalign, and they say, we want you to come to this Asia Pacific conference and talk about your experience, and we'll play the song. So I go there. They pay me to go there. I get my whole family out there. It's not too far away because I live near San Fran in California. And we go. We sign. Donald Trump had just stayed there the week before, so it's like it's a 5-star Forbes rated hotel. I mean, it's a nice hotel, right? So we get there. I'm going in, and we build this presentation, or I write this presentation. I go, I talk, they play the song, 500 people, and then I sell the song, right? So when I sell the song, I made $10,000 selling this jingle to the company. And I got to work with corporate. It was a nice experience. It actually even prepared me for our recent type of moves where we just signed a contract with Robinhood. I don't know if you guys have seen some of the deals or some of the ads with my face on. I don't know if you guys seen it, but I recently signed an assets agreement to give them some assets for some ads. And anyway, kind of understand the corporate structure of how those deals work. But anyway, I took it in stock. It turned into much more than $10,000. And I thanked my parents. I said, this piece of equipment that you got me made me 100 times more than what it cost. It wasn't this microphone, it was years ago, but it was just so funny because building and that changed my mindset. I said, if I have the right equipment and I have the equipment that puts me at the level of the standard I need to be, it's not that big of a bar today. In 2025, you can have everything you need with some simple equipment. And so that's why I say invest in equipment that's going to get you there. If you're a construction company, you buy the tractor, right? If you're building your own self-storage, you buy the storage or the fences so you can rent it out or what have you, right? So the equipment. And allocating, we could do a whole class on this, but just know AI plus tech stocks so are good. Check mark. Nice and good. All right. And if you guys want to stay up to date with those stocks and get the best companies to invest in, then make sure to subscribe. So also subscribe to Will and catch all the future videos and past videos of the best quantum stocks, space stocks, investments that are in emerging markets that can make you more money. And just to preface as well, this savings here is number 3. Cool, guys. So number 4 is the idea that the goal is not to lose money. So when you're investing in something, you know, there's obviously going to be some risk always. But one of the things to consider is, I'm just going to put like a square here, and you can kind of get an idea of how this looks. There's a square here, and I'm going to put another square here, and I'm going to make that square way smaller, and I'm going to add one more square. All right, so this square here, let's call this the profit square. Okay, so this is called the profit zone. And then this one here is the progress zone. And then here is the loss zone. Okay? So kind of how we approach almost any investments is we want to have levels of focus in our investments that are going to give us the best return over time. So if you could only pick, let's say, 4 stocks over the course of an entire year or something, what stocks would you focus on? Well, you would want to focus on some stocks that, let's say, you're willing to lose 10% in a year, okay? So you'd want to have a loss ratio of, let's say, 2.5%. So this would be a loss, right? And maybe this is stocks. This more applies to investing and trading than it does for real estate, but the same principles can apply. But essentially, like, let's just take it for trading, for example. You now are looking for profit, and the profit you're looking for is, 10 to 20%. Okay? So if you're looking for a 10 to 20% profit, and you want to buy near this level of where the loss is. So actually, where we could put this here is right there. That's the bottom. And where we could put this up here is when you take your profit at the top, all right? So you might buy right here. Okay, so this is your buy zone. You want to buy in a place where you are getting a good deal, and maybe, from here you're already in profit. Like, you buy even closer, whether it's a car that you're flipping, which is a little more risky, but real estate, or it's if it's real estate, you want to go off market, maybe send out mail to use a tool to send out mail to a list of vacant landlords or houses that look like distressed. They have softwares for that. Send out direct mail that says, want to buy a house, get it under market. Or you're doing a stock trade, so you've seen a big correction down and you see this margin for profit that could be 10 to 20%. So now, let's say you buy here, and if it goes up or it goes down, if it goes down and hits this loss here, okay, you lose 2.5%, right? And you might do that 4 times in a year, and maybe it's a month or what have you, right? Um, but what you need to realize is, okay, it's a 2.5, it's 2.5. All right, it's, a 10% loss. All right. So you lost 10% or what have you. But let's take a look now at the profit, right? So if you're going for the profit, does this make sense? If you're going for the profit here, and one time this investment, whether you got a good deal and it's immediately worth 10 to 20% more at like right after, because you bought a house oversold, or you bought a stock or an asset, and it's immediately worth more because as soon as you claim it, you could then sell it for more, whether it's options or stocks. All right, so you make 10%. 10% here would be a 10% gain. Okay, so 10%, one time is what you have to make 10% to make a profit, right? So 10 to 20%. Now, the idea is you don't even have to win your investments more than 50%. You just have to get good deals. So this is something I didn't always understand. It's like the goal here in all this is to not lose money. If you have an investment, it's gone up 10 to 20%, and you think it might be overextended and it's in this area where it's not looking like as good of a deal, then maybe it's a good time to sell and look for an entry, unless it's a very long-term investment, right? You got to think about that too. But then look for entries where you can get back down to this level. And look, if you have even above, what is that? Above a 33% win rate, or as good as a 33% win rate, and you're profitable. So you don't even have to win every investment to make returns. So this is what Warren Buffett does, right? Does Warren Buffett always win every investment? No, he doesn't. But he cuts his losers short and he adds to his winners and makes serious profits. And that is what the difference is. So a lot of people, they see green up here and they get excited. The market's up, housing's up, investments are up, crypto's up, stocks are up, and they see all this green and they get really excited, right? So they see this green up here and they see plus 10% and they get excited. But the key is to not buy when things are green, but actually to buy when things are down 10% or down 20%, because that's when you're getting a good deal. So I hope this premise helps you. I hope that you could share it with a friend if you found it valuable. And this is the risk management, the long-term and short-term and medium-term formula that's allowed me to make above average returns in business and investing. And hopefully it's been helpful for you. So those are all 4 steps. Again, just to review, you got tracking your net worth. Number 2, profit first formula with having accounts managed in a way that are able to take stress out of the future and capitalize on the golden age that you're in with the ability to buy assets that can generate money for you. And then 3, being able to future-proof your cash, your crypto, and your stocks by investing in things that improve and increase in value. And then number 4, having a risk management and profit outlook and plan for every investment that you make, and don't lose money. All right, guys, appreciate you all. Thanks so much for tuning in. We also go live every morning at Market Open. For those of you guys that enjoyed, my name has been Will Rich. I hope that it's been valuable for you. And if you ever feel like you'd like to join us in those daily live sessions or get a one-on-one call with myself, the links are down below. The second link down below for Stockmate, which is our daily live trading investing live stream we do each day at 6:30 a.m. Pacific Standard Time. Thank you so much, and I'll see you guys in the next video. Take care.